Good morning. Welcome to Trading Hour. It's a Friday morning. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Hormuz Patakia. Well, we started the week with gains and looks like we're ending it with gains too. It's just that we've come off from the day's high. Pull up that intraday chart. The intraday high on the Nifty was actually closer to 24,600. So we've slowly given up gains. We're still holding up in the green, up about 0.5% on the benchmark indices. But as you can see, we're off from the session highs. What's helping is the green across the Asian market screen. So whether it's the Japanese markets or the Hong Kong markets, indices there are up more than 1%. And once again, it's so much about individual stocks and earnings reaction.
Oh, absolutely. And that is showing up on the screen as well, right? Even the Asian markets are higher. The Dow futures are higher. Of course, after the Chinese statement of evaluating trade proposals with the United States. But of course, there are plenty of earnings reactions within the broader market space. Of course, there are no Nifty companies reporting results today. But the broader markets, look at Godrej Agrovet now, the top loser on the Nifty 500, down 11.5% in the earnings reactions list. Phoenix Mills too is down 6.5%. Nugent Software reporting results today is up 13%, and it's seen a similar surge last week as well when the stock had gone up by around 10.5%. So Nugent Software is the top gainer on the Nifty 500 now. Railtel is the other one. It's been holding on to those gains from early morning, 12.5% higher there as well. And of course, there is Indus Towers, a disappointment when the numbers front maybe not, but of course the anticipation of a dividend, the bonus, that has been delayed, and that's what's weighing on the stock, I guess.
Oh, indeed. Indus Towers is down nearly 5%. But bear in mind that hopes of, Vodafone Idea's situation improving, the recoverables from there, the hope of dividend, the stock is up 90% in the last 3 years. So it's been a big outperformer. It got re-rated. And today you can see some amount of disappointment. You spoke about Nugent, numbers expected today, and the stock is surging. Well, for Nugent, we have to watch the growth rate. Because in the past, the company's growth rate used to be 20-25%. And in Q3, it slowed down to 18%. Right? So, we'll have to watch whether there is another, quarter of slowdown, or they can get back to the 20% kind of growth. So for Nugent Software, clearly it's going into the earnings with a fair bit of optimism, but the growth rate, if it can get back to the 20% plus mark that it used to enjoy historically, will be exciting, because last quarter it dipped to about 18%.
The stock has been down 35% so far on a year-to-date basis. So some bit of underperformance, and that some reversal from the lower levels as well. It has a 52-week high of around 1800. The stock currently at 1100. So 13% higher on Nugent Software in anticipation of results. But the focus is also on auto stocks, because the sales numbers came in for the month of April yesterday and today as well. Sudarshan is joining in with more on that. Sudarshan.
So overall sales for the month of April have come in as per expectations. The one segment which has done the best is the passenger vehicle segment. And for two-wheeler segment, sales have been largely mixed, and even tractor segment has seen some improvement. So we'll start with the company which has reported the strongest sales is Mahindra and Mahindra, and has reported strong sales for both its segments, auto segment as well as tractor segment. Sales for both these segments have come in better than estimates and also have increased year on year. And good part for its auto segment is M&M is now number 2 player in the passenger vehicle segment, surpassing both Hyundai and Tata Motors. Now coming to Maruti, it has also reported sales which was better than estimates, and good part is this time for the month of April, its compact segment, cars like Baleno and WagonR have seen increased sales, while one segment which has been under pressure for last few months, or say for last few years, is the sales of Alto and Espresso. Even in the month of April, sales for both these have fallen 45%, but overall total sales have increased year on year. It has come in at 1.80 lakh units. Now in two-wheeler segment, one company which has been outperforming its peers and also in the month of April has outperformed is TVS Motor, and all the segments have seen a double-digit growth. And if you look at the growth of export segment, there the growth was seen at 45%, and its electric vehicle, or say EV scooter, there the growth has been almost 60%. Exactly, it was at 59%. But again, in the two-wheeler space, one company which has been weak for the last few months, and even in the month of April, the sales were weak was of Hero MotoCorp, and this time it has reported total sales of 3.05 lakh units. But in the month of April, it had announced that it had closed from April 17 to April 19 4 facilities, and that had impacted sales. But if you factor in that also, despite that, sales have come in below estimates. Expectation was that sales might be around 4.50, but it has reported 3 lakh units. Again, in the four-wheeler space, one company which has been weak is Tata Motors. It has seen decline all around except two segments, that is the heavy vehicle, commercial heavy vehicle and truck segment. All its segments have seen a decline, and especially EV segment, in which company has been the leader. But in the month of April, sales for EV also have fallen almost 16%. And today, Bajaj Auto and Ashok Leyland also have reported sales. Bajaj Auto has reported total sales of 3.65 lakh units, which is lower than our expectation of 3.85. Also for Ashok Leyland, total sales have come in below expectations.
Thank you very much for that. But the big loser in the auto pack is Eicher Motors. That's down nearly 2.5%. Still awaiting numbers there. Bajaj Auto down about 1%. On the way up in two-wheelers, TVS Motors, Hero MotoCorp. TVS Motors doing much better, 2% up. Hero MotoCorp with a gain of about 0.6%. And Maruti Suzuki is racing ahead, 3% higher on that. And Tata Motors looking up with a 2% gain. The stock of the week undoubtedly has been Reliance Industries. A 9% up move on Reliance Industries. Exactly a week back, it came out with numbers, and every single day it's been powering ahead. So it's Reliance Industries. Sudarshan, you want to quickly come in?
Because on Eicher Motors, the reason the stock has been under pressure because sales for the month of April, Royal Enfield sales were largely in line with expectations, but now company is going to report the earnings, and now there is an expectation that it's in the last few months it had seen an improvement in sales, mainly because of the increased sales in the lower end of the segment, and that might impact the margin. But as far as sales are concerned, it's in line with estimates. Also remember, stock in the last few months has outperformed all its peers.
Indeed. So interesting, they're in line with expectations. Of course, with an outperformance like Eicher has seen, in line does not cut it, right, with the street. He's seeing some bit of pressure on the stock there as well. But moving to corporate conversations then, Home First Finance is our first management on our corporate radar today. Their P&L momentum remained strong. Asset quality also remained stable. The NIMs fell on a year-on-year basis, but improved compared to the previous quarter. Now, to discuss the quarter gone by and the road ahead, we are being joined by Manoj Viswanathan, the MD and CEO at Home First Finance. Mr. Viswanathan, good morning. Thank you for joining in. Let's start off with the disbursement momentum, right? Your disbursements grew around 15.5% during this quarter. What did you end FY25 with, and what targets have you set for yourself, both in terms of disbursement growth as well as AUM growth for FY26?
We ended with 4,800 crores, 4,800 crores, which was in line with our original guidance for the year. And that's about 20%, 21% year-on-year growth in disbursals. And we are looking at a similar number or a similar growth rate for disbursals for the current year as well, for FY26. So that will be in the region of 5,600 to 5,800 crores of disbursals.
Okay. What about ROE? Are you looking to expand it? I think because your ROEs used to be sub 10% about 3-4 years back, and you've been steadily improving it. What does it stand at currently, and is there scope to expand ROEs?
So we have had a very good year in terms of return on equity. We delivered a 16.5% return on equity for the full year. And we actually exited the year last quarter at 17% return on equity. So that has been, so that is what we had, originally planned, that we should have a strong returns, and that's what we have delivered. For the current year, of course, the return on equity will be muted because of the capital that we have raised recently. So I just wanted to bring to your attention that we have done a QIP in April. So that has significantly increased our capital base. So the net worth has gone up from about 2,500 crores to about 3,750. So we did a QIP of about 1,250 crores. So because of the expanded equity, the ROE will be a bit muted, for the current year. But we again hope to catch up in the next 18 to 24 months.
What do you plan on using these 1,200 crores for, Mr. Viswanathan? Is it growth capital? You want to preserve it as a buffer? What are the plans that you have laid out for this?
No, it's absolutely growth capital. We have been growing at 30%. EUM has been growing at 30% over the last several years. And if we want to kind of sustain that momentum, we will need additional capital because our leverage is already touched 5 times. So if we want to keep that, under control, we will need more capital, and which is why we have gone ahead and raised the capital. So this capital raise should sustain our growth for the next 3 to 4 years.
Is there an inorganic growth acquisition in the pipeline?
No, we are not looking at anything inorganic. We are looking at growing organically. That is all. That has been always the DNA of the company.
So 30% plus AUM growth for FY26 should sustain. And you'd given an aspirational AUM target of 40,000 crore by FY30, I think. Will you be able to fast track that now that you've got growth capital?
No, our aim is to, we have made a long range plan, and our aim is to kind of stay with the plan. So there are, as part of the plan, there are many things that need to fall in place, and which we have, which we are working towards. So it is generally not in our DNA to accelerate, etc. So there is a certain plan that we have made, and we kind of we will stick to that.
Do you want to tell us your long-term plan? The 40,000 crore AUM is there, right, by FY30? Are there any other metrics as a part of this plan?
No, yeah. So the 40,000 is, I think somebody has rounded it off.
Okay.
What we have conveyed is the 35,000, between 35,000 to 40,000 crores.
Got it.
What about margins, Mr. Viswanathan? Over the sequential and even on a year-on-year basis, they have been hovering in that range of 5 to 5.5%. Where do you see margins going from in FY26, particularly in a declining interest rate environment?
So net interest margins, as we have always conveyed, is a function of how much the company is levered. So as you can see, last year the company was the most levered. So our margins were at about 5%. So what we generally operate at is a 5% spread for the business, and the NIMs then fluctuate between 5 to 6% depending upon how levered we are. So if we are under levered, now we are going to be under levered because we have just raised capital. So the NIMs will probably expand a little bit. But broadly, our business is a 5% spread business, and the NIM, the total income will be in the region of around 7.5%, including fee and other income. So a 7.5% total income is the core of the business.
So if there are rate cuts, and we've already seen some rate cuts, how will it impact your spreads?
See, at present, the rate cuts are, fairly small, and, the transmission has not yet started. So as the rate cut gets transmitted to us, gradually it will also get transmitted to customers. But broadly, we operate a fully floating rate book. So, whatever rate cuts we enjoy will have to be eventually transmitted to the customers.
What about asset quality, Mr. Viswanathan? It was relatively stable on a quarter-on-quarter basis and at around 1.7% this time around as well. Do you expect that figure to trend down as the situation improves, you see more recoveries, or do you see it remaining at around these levels as well?
The gross NPAs have been at 1.7% for a long time, for several quarters in a row, as you can see. The early delinquencies, of course, fluctuate a little bit. And if you see last quarter, our early delinquencies have actually come down substantially by about 30-40 basis points. But that again is, slightly seasonal. So there is, it floats in the region in between 4.5 to about 5%, the early delinquencies. But gross NPA likely to hold at current levels. And that is just the nature of the business. So 1.7% gross NPA is, I think, the way the business works.
What's your presence in Karnataka, exposure to Karnataka?
Exposure to Karnataka is about 5 to 6% of our AUM. Yeah, it's not very substantial.
Okay. Was there any impact of this e-Khata issue?
There has been some impact, yes, because, the registrations are getting delayed because of the e-Khata. But because our exposure to the state is not very large, it has not been a very large impact for us.
What was the impact you would assess? I understand it's not very significant, but
4 to 5 crores a month.
Sorry, how much?
4 to 5 crores a month of disbursements.
Okay. Were there any other, specific issues which have impacted your growth?
No, there is
positively or negatively?
No, I think overall, the environment has been supportive in terms of generating demand for affordable housing. And our growth has, growth has been as expected. I mean, we were looking to grow at about 30% AUM this year, which we have delivered.
All right, Mr. Viswanathan, thank you so much for sparing time and joining us today. Wish you good luck for FY26 as well. We take a short break, but just before we do that, there were some flashes on your screen just a few minutes ago about JSW Steel, and that the resolution plan of Bhushan Power and Steel has been rejected by the Supreme Court, and that is weighing on the stock price now down to the lowest point of the day, 2.6% lower there at 1,000 rupees now is JSW Steel. We'll get you more details on this as they emerge. When we take a short break, the Nifty is still up 100 points, still off the highs of the day though. Up next, we discuss all things commodities with Manisha Gupta. Back with us here on Trading Hour, shifting focus to all things commodities, and Manisha Gupta is now joining in with emphasis on the topsy-turvy crude oil prices. Manisha, good morning.
Oh, well, yes, it has been topsy-turvy. That's the best way to explain it, really. What we are looking at in sense of crude oil prices right now is 2% of gains in the overnight market. And if you look at the Asian markets right now, there's a bit of a gain, as you can see, trading into the markets there. But even with these gains, the Brent is just about holding 62. And when you look at the US crude oil prices, they are still trading around that 59-60 mark, between those ranges. Well, the US has imposed newer sanctions on Iran now. Remember, we've seen exports and various sanctions on individuals and companies as well come in on Iran. Now the US says that any country that buys oil from Iran will not be allowed to do business with US, and that is something that seems to be bothering the bears in case of crude oil prices, and we've seen some premium come in sense of buying there. Apart from that, Saudi Arabia also says that they are not willing to prop up prices by cutting any more production going forward. Remember, Saudi Arabia is a big chunk and a part of OPEC and allies, and they are going to be increasing production by 411,000 barrels per day starting 1st of May. And there's a meeting of OPEC and allies on 5th of May, which will talk about further increase in production for the month of June. So that is something that will keep the prices capped at these current levels there. Well, apart from that, the gains in US equity seems to be weighing onto the markets as well. And then you have the dollar index, which is back above, trading at $100 rather as a point, and that is weighing on many of these dollar denominated commodities. Well, the first quarter GDP numbers coming in from US were on the weaker side. So has been the case with consumer confidence numbers in US, PMI data, factory numbers from China. All of that has been on the weaker side, will continue to weigh onto the markets. For the longer term, slightly, the markets do believe that you could see further pressure coming for the crude oil prices. But for today, it is going to be about the US non-farm payroll data that would give you the near-term reactions.
Thank you very much for that. Let's move on now to IndiaMART. They came out with their numbers on Wednesday. It was a flat sequential revenue quarter, a little bit of a sequential dip in margins, but still very healthy at 37 to 38%. Profit growth was quite high, 49%, aided by higher other income. Dinesh Agarwal, founder and CEO of IndiaMART, is now here to join the quarterly numbers. Thank you very much, Mr. Agarwal, for joining in. This is Reema here. So the first question is on margins. Now, you've always guided that historically margins, on a normalized basis should be 33 to 35%. You are operating at higher margins. What explains that? And when will you get back to margins of 33 to 35%?
See, if you really see, we have not been investing in the new customer growth because our churns are elevated. And that is what is also shown up in the functional P&L, where our sales and marketing expenses used to be about 17-18%, but we are only able to spend 13-14%. And that is the precise reason that the margins are elevated for right now. As we start to invest in growth, and once we have the better handle on churn, I think the margins should, in the long run, trade between 33 to 35%.
So this problem of churn, it's been a problem now for a while, more than about 1.5 years. And when we speak to you every quarter, you've been saying you're taking steps to address it. Why is it, what's been the problem area, the bottleneck in addressing the high churn? And when do you think it'll get resolved?
Yeah, ma'am, this is a large horizontal marketplace with especially dealing with small and medium enterprises. And small and medium enterprises have their own churn. There are external economical factors, and there is a product market fit and changing expectation setting of our internet users over the last couple of years. So I think it's a combination of a lot of things. Even to get the first time right, it takes multiple iterations. We probably found them getting it right sometime around 2015. It has worked very well until 2022-23. And post-COVID scenario, I think we are reworking on retweaking certain assumptions that we were having during 2017-18 when we when we had lesser number of suppliers on our platform. Now we have a lot more number of suppliers, and we can do more local matchmaking within the suppliers. Similarly, now we have better tools for categorization of the suppliers and their products using the AI and the photos based identification. So we are working on some of those. Hopefully the result should be here soon.
Mr. Agrawal, good morning. Thank you for joining in. What about the results among the paying subscribers, sir? You had a decline in the previous quarter. Even in this time around, your growth has just been 1%. When do you see that stabilizing? Do you see that happening in the second half of the year, or do you expect this year to be a flat year as well for subscriber addition?
As I said, in the last many quarters, I have been saying that please wait for a couple of more quarters, and I have nothing more to say even today. So let's just we are keep working. We have done that multiple times in the past. I think it is taking much longer at this size and scale today. But I am pretty confident that we and our team would be able to find a better solution to this.
Do you think 2 more quarters, 3 more quarters? I know this is a tough one, Mr. Agarwal, to answer, but that's the question everyone wants to know. That because IndiaMART was such a high-growing company, high-growth company, just till 1.5 years back, and things have slowed down with fewer paying subscribers, the high churn, and therefore now you're not investing. So, when does it get back to what it was, say 2-3 years ago?
Yeah, that's what I'm saying. Let's just wait for a couple of quarters, and I hope I'm able to give you a better news.
Okay. Until then, margins will remain elevated.
Yeah.
All these things will get fixed together.
Yes.
Low churn, return of paying subscribers back to 5,000 rupees, and then margins coming back to 33 to 35%. All of them are tied, and they will all happen together.
Yes.
Okay. What about collections? We've seen a bit of an improvement in your collections, at least in Q4 versus the prior quarters. But again, it's still lower than the historical levels of 15%. Can you throw some more light on what led to the collection improvement and the way forward?
Yeah, so collection has two parts. One is the average collection per customer that we get, and that has been doing very well. So whatever growth that we got in 2022 and 2023, many of those customers have upgraded to Gold and Platinum. And currently our Gold and Platinum base accounts for about 75% of the overall collection and revenue. And there, even the average collection per customer is going up quarter on quarter. If you see last so many quarters, it has been almost 8 to 10% every quarter. While the second part of that is the number of paying customers. And since the number of paying customers, we have not been able to grow because due to elevated churn in the first year silver level, silver monthly and silver annual customers. That's where the second part of the customer collection growth is not coming. Otherwise, collection growth would have been in the higher double digits. So currently, until we fix the paying supplier growth, I think the collection will remain in this range.
The other bright spot this time around has been the improvement in ARPUs, Mr. Agrawal. It was up around 11%. Do you see any further scope of increase here as well?
I think in terms of percentage, no, but this will continue. About 8 to 10% of the ARPU increase will continue for at least next 1 year. That much I can say.
Okay, 8 to 9% improvement every quarter in ARPU, at least for the next 1 year, is what you have reasonable confidence about. What is the cash right now on the books, and what is the board thinking in terms of deployment?
Yeah, cash, we have about 2,885 crores at a consolidated level. And the board has declared a dividend of rupees 50 with 30 rupees dividend and 20 rupees special dividend. That takes away about 300 crores from here. We have about 1,678 crores of deferred revenue. So that leaves us with about 1,000 crores of safety cash for a company of our size. We will continue to accumulate and see if there are any investment or M&A opportunities going forward.
Do you see those deferred revenues trending down, Mr. Agarwal, anytime soon with 1,600 crores? Do you expect that to come down and accrue to your P&L statement? And part two is that you have 1,000 crores. You said you can try utilizing that 1,000 crore cash for M&A. Is there something on the lookout?
No, we always have been looking at these things. Last year, we made some of the follow-on investments. We also made a very good investments in ID5, and ID5 as a company has done very, very well. On your question on the deferred revenue, in fact, deferred revenue is the very healthy metrics for our future revenues. We have a current portion of deferred revenue at about 64% and non-current portion at about 36%. So that makes it about 20 months of revenue, pre-booked revenue, which is there in the deferred revenue. And that gives us the confidence that our revenue from operation, despite the collection being lower in the past few quarters, revenue from operations has been going in the double digits.
Okay. So last year, Mr. Agarwal, just one final question. Your revenue growth was 16%. In FY24, revenue growth was 21.5%. FY23, revenue growth was about 30%. What can you guide your shareholders for what IndiaMART is likely to do in FY26? I know it's tough, but some sort of an indication to the shareholders.
Yeah, given the revenue growth always mimics the collection growth in the last 4 quarters or so. So if you really see the last year, entire year, the collection growth has been about 9%. And based upon that, we can assume that revenue growth will also come matching towards that side for the next year. Unless the collection growth improves significantly based upon the paying suppliers growth, the revenue growth will also come down to about 10%.
All right, Mr. Agarwal, we'll hold you to these numbers. Thank you so much for sparing time and joining us today. Wish you good luck for FY26. By the way, IndiaMART has recovered from the lows of the day, currently trading around 0.8% lower. What has fallen to the lows of the day, though, is JSW Steel, and that is after the Supreme Court verdict rejecting JSW Steel's resolution plan for Bhushan Power and Steel. And the Supreme Court has also mentioned that JSW Steel's resolution plan was illegal and it should not have been accepted by the Committee of Creditors. So these are lines coming in for JSW Steel, and the stock has now declined to the lowest point of the day. The Supreme Court has also directed the liquidation of Bhushan Power and Steel. Mind you, Bhushan Power and Steel, as per what Nigel's telling us, is that it was chosen as the winning bidder. JSW Steel was chosen as the winning bidder for Bhushan Power and Steel's assets in September of 2019. So it's almost after 5.5-6 years that this judgment has come in from the Supreme Court. We'll get more details on this as the day goes by, but for now, JSW Steel among the top losers on the index, 4.5% lower at the lowest point of the day. Reema.
Nigel was just writing because he looks at it closely. He's saying investments have been made, cash flows have come. So now to reverse this kind of a decision, which has been there in place for the last 5 years, is going to really hurt and cause a lot of uncertainty, and the stock is reacting to that. So far, we have not heard from the management of JSW Steel. We're just getting some lines from the Supreme Court that Ashmit has picked up. I think the matter is still on. I think the matter is still on. Yes. So we'll try and get you more details on that. That's the big story right now. Get into a break. On the other side, market technicals with Mitesh Thakkar with his top trading bets. Stay tuned. Welcome back. Indus Towers is slipping, now down nearly 5.5%. Pull up that intraday chart, and the key reason is despite a robust Q4, the street is disappointed by the lack of a dividend announcement. What they have done instead is constituted a subcommittee to explore options for returning cash to the shareholders. You know, the street was very, very hopeful about an Indus Towers dividend. The reason is because Indus Towers was a cash-rich company. They used to pay dividends till 3 years back. Then 3 years back, they stopped paying dividends. So basically, 23, 24, FY25, there were no dividends because the company had a lot of receivables from Vodafone Idea. But prior to that, it always paid a dividend, and the dividend payout ratios were fairly healthy. But now this year, after Vodafone Idea raised the QIP, then the government converted their stake, the receivables from Vodafone Idea to Indus Towers kept declining. So therefore, the street became hopeful because their cash flow is now improving and they are in a position to give money back to the shareholders in terms of a dividend. So the street was hopeful and the stock, in a way, also got re-rated. You know, the 52-week low was June last year of 292. From there, the stock rallied more than 30%. In the last 3 years, it's up nearly 90%. And if you look at the free cash flow number, there you have it. It has substantially improved. Next year, it won't look this good because, you know, this year had this lump sum Vodafone Idea receivables, which, you know, they got back. But the numbers, the free cash flow was very strong. So therefore, the street was hopeful. That said, all hope is not lost. Brokerages are basically saying that it didn't come this time, but it will come in the future. So Ambit is saying they expect the company to announce a dividend of 20 rupees per share in the next 6 months. They also anticipate a potential buyback similar to what they did in August of 2024, with the Bharti family unlikely to participate. Both Ambit and IFL have a buy call on Indus Towers because they also say valuations of Indus Towers vis-a-vis global peers is a lot cheaper. IFL's target price is 450, and in that, you know, when you look at the breakup, they have assumed a dividend of 20.5 rupees. So looks like it's coming, but just not,
Just
today.
not now, I guess. We're hoping for that sooner or later, I guess, but brokers.
Hindi mein na, they say der aaye, but durust aaye. So jab aayega, to then I think, the stock will be supported.
Indeed, we look forward to that, especially the retail shareholders, the smaller shareholders of Indus Towers will be looking forward to that. Either a bonus announcement, which would be the first one for the company, the buyback which they had done last year, or a possible dividend announcement which they haven't given in the last 3 years. But for now, 6% lower on Indus Towers, giving up some of the gains that it has had over the last 1 month. But Mitesh Thakkar is joining in now for a quick chart check and for some trading ideas as well. Mitesh, good morning. Thank you for joining in again. Well, we are off the highs of the day, still finding some barriers at around 24,500 is the index. Do you continue to maintain a cautious stance, or would you believe that this is the right time to enter, or would you wait for a dip? And of course, your trading ideas for the morning. Mitesh, I think you're on mute. Mitesh, can you hear us?
Now it's better, yeah.
Yeah. Please go on, Mitesh.
So, I think, the Nifty appears to me, getting into a range. We did actually get past 24,500, 550 zone today intraday basis, but I still believe that the position of the indicator suggests that, we will consolidate before we actually make a big move on the upside. So, I think if somebody is having long, then I think 24,250 now because of trailing stop loss. Broadly, it looks like 23,800 to about 24,500 kind of a range, given take 50 points here and there.
What about specific stocks, Mitesh?
Yeah, I have a buy on Persistent with a stop below 53.80. Look for targets of 55.50 over there. And a sell on Phoenix Limited with a stop at about 15.75 for targets of 1500.
Thank you very much for that. Let's talk about Cognizant because they reported a steady set of Q1 calendar year 25 earnings. They've maintained the full year revenue guidance at 3.5% to 6%. I caught up with the management of the company to discuss the quarter gone by and how things will pan out. Listen in.
Thank you, Rima. Thank you for having us on the show today. It's a very uncertain time and it's also very complex for our clients. Some sectors it is more complex and more uncertain, in some sectors it is not. But effectively, when you have uncertain times, technology can be leveraged for productivity, efficiency, and creating opportunities for clients to thrive in the uncertainty, and sometimes underwrite that money for innovation purposes.
Ravi, we know the first order impact of the tariffs is on sectors like manufacturing, particularly auto, the consumer retail sector, travel, tourism, logistics. These sectors are feeling the heat. But is there a risk that the second order impact, which is on other sectors like BFSI, which is so far very resilient, that will come into play? I mean, are you preparing? I mean, are your clients worried about that? And where is it that we've seen, deal cancellation or deal pauses?
We haven't seen deal cancellations so far. We have, we have had a very resilient quarter. I would say there is going to be second order impact if there is uncertainty. I mean, even if there is one sector which gets impacted, financial services will have downstream impact, and there is going to be consumer spend, which is an important metric for financial services. If you just look at software development cycles, I think the industry is going to shrink because software is going to be written by machines. One of the other pillars which Cognizant is excited about is engineering products. The last 10 years, technology was deeply immersed into services industries. The next 10 years, I actually believe technology will be immersed into anything physical, making physical products intelligent, autonomous, and connected. And that will lead to more technology. Now, if software is written by machines, because of the elasticity of spend on software, you can actually drive more.
Vision for this summit and for its consistent, unparalleled leadership in taking India and Indian culture to the world. This summit is a powerful reminder of who we are and who we have always been. I speak to you as a proud citizen of our ancient land. And the theme of my keynote is taking India to the world. Long before the birth of the internet or even cinema, the influence of Indian culture had already spread across the globe. Taking India to the world is not a new concept or a new idea. The light of India has traveled far and wide for thousands of years. Hundreds of Buddhist monks from all over the world traveled on foot to India in ancient times in search of cultural and spiritual knowledge. In Japan and Indonesia, Hindu deities like Lakshmi, Saraswati, Shiva, Ram, and Ganesh are worshipped even today. The splendor of India's temple architecture can be seen in Angkor Wat in Cambodia, Borobudur in Indonesia, and the ruins of charm temples in Vietnam. Indian philosophy left a deep imprint on some of the greatest thinkers and philosophers of the world. We are a country enriched by the wisdom of its civilization, but equally energized by the throbbing energy of the world's youngest population. A country where sacred traditions meet modern dynamism in perfect harmony, where the rising power of our economy, soon to be the third largest in the world, meets our soaring global soft power. We are a timeless civilization that gifted humanity with the enduring ideals of Satya, Ahimsa, Ekta, and Aman, truth, non-violence, unity, and peace. A luminous nation that gave the world the wisdom of the Vedas, the Bhagavad Gita, and the teachings of Gautam Buddha and Mahatma Gandhi. Bharat is where it all began. India is the origin of Om, the sound of the birth of our universe, the birthplace of zero, Shunya, the beginning of the infinite, the home of Sanskrit that gave the world language, the land of yoga and Ayurveda, the pioneer in science and philosophy, from Aryabhat's astronomical calculations to Adi Sankaracharya's Advait Vedanta, the beacon of arts and literature, from our classical music and dance forms to the epics Ramayana and Mahabharata. We are the very cradle of civilization, a cultural force whose time has come once again. Every civilization tells a story. Some tell it with power and might, but we have always told our stories with our soul. For over 5,000 years, from our Kathavachaks to the traveling bards, from our legendary folklore to temple murals, and from our epics to present-day cinema, storytelling has always been the heartbeat of our legacy. In the modern age, India's magnificent heritage and the soft power of our theatre, dance, music, cinema, writers, artists, and artisans have won the hearts and minds of people in all continents and corners of the globe. Friends, like all Indians, we at Reliance Foundation are great admirers and ardent supporters and passionate lovers of art. And we deeply believe in the power of our culture to heal, inspire, and unite. At the foundation, we regard it to be our highest duty to protect, preserve, revive, and honor India's priceless artistic legacy. It is with this spirit that we started the Nita Ambani Cultural Center 2 years ago. Our vision is to showcase the best of India to the world and bring the best of the world to India. With the same vision, we started Swadesh, our humble movement to encourage and promote India's age-old arts and crafts on the global stage. Swadesh honors our traditional artisans who have learnt at the feet of their fathers and grandfathers, and whose every weave, every carving, every brush carries not just the touch of the hand, but the memory of centuries. For instance, the Indian sari, which is one of the fondest expression of our tradition. Today, our timeless 9 yards are weaving the India story across fashion runways, woven by our weavers with love and worn by our women with pride, wherever in the world they are, from Mother Teresa to India's missile woman, Dr. Tessie Thomas, to our Finance Minister, Srimati Nirmala Sitharaman, our lawyers to journalists, and from astronauts to change makers, all wear it as an ode to a legacy that has been passed down over thousands of years from their mothers, grandmothers, and great-grandmothers. That is the magic of our culture. It evolves without erasing. In most
Okay, we'll keep cutting back to Nita Ambani. For now, it's time to get an update on JSW Steel. That's the big story breaking now. Ashmit is joining us from the courtroom. Ashmit. Okay, Ashmit, we'll try and reconnect with Ashmit. But just to react to, okay, we'll go into a break then. On the other side, we'll continue the story. Ashmit joins in, and Nigel too will be here with us in the studio. Welcome back. As promised, it's straight away across to Ashmit now, who gives us the latest update on JSW Steel and what's come out of the court proceedings today.
Well, a major setback as far as JSW Steel and its plan for Bhushan Power and Steel is concerned. Bear in mind that this story goes back all the way to 2019. The whole insolvency process began in 2016. It went through the motions. In 2019 is when the NCLT had granted approval for JSW to proceed forward. Its resolution plan had been approved. It was nearly 20,000 crore rupees. Now, however, It has gone through the motions of challenge before the various courts and tribunals. It landed before the Supreme Court. The Supreme Court, from what we're picking up, is that it had taken objection to two aspects. Number one, the Supreme Court frowned on the fact that the resolution plan wasn't executed within the given time frame, which is a 30-day period, wasn't complied with, and that was the first ground for not having, for striking down this JSW resolution plan. The other is the Supreme Court has taken exception to how this transaction was put through, had been gone through by JSW, bringing in equity and convertible debentures. The Supreme Court's rationale was that only equity could have been brought in as per the proposed resolution plan. So on both these grounds, what the Supreme Court has essentially held is that as far as JSW Steel's resolution plan is concerned, it was illegal, should not have been accepted by the lenders, should not be allowed to proceed forward. And on that grounds, the Supreme Court making it clear, sending Bhushan Power into liquidation. So trying to close the chapter there, coming as a shocker, however, for JSW Steel. We'll, of course, have to wait and see if they choose to take the legal remedy of maybe appealing against this order in the form of a review petition. We'll have to ask. We'll have to get a confirmation from them if that's the legal remedy that they choose. But for now, a definite setback coming in.
Setback indeed for JSW Steel, now 6% lower on the stock after this. And Ashmit, thank you for that update. But Nigel is joining in with more on this. And Nigel, tell us more.
Well, this is an absolute shocker, because as Ashmit said, that the process was initiated a few years ago and JSW Group took over this asset in 2021. In October 2021, JSW Steel, that's the listed entity, had 83% stake in this particular entity. And as of today as well, the last presentation says that they have 83% in this entity. Why is this important? When this asset was acquired, it was a 2.75 million ton unit. That unit got scaled up to around 3.5 million ton unit. And as of the last recorded number, the Bhushan Power asset, it contributes close to around 4.5 million tons on JSW Steel's consolidated capacity of around 35.7 million tons. So 4.5 on 35.7 million tons means it contributes around 13% of the total capacity. What about profitability? I'm looking at the last few numbers, and the EBITDA front, as a percentage of the total consolidated entity, it contributes close to around 10%. This is going to be a shocker because JSW Steel took over the asset, they turned it around, they put in money, and suddenly if this is going to be liquidated, how do you account for all that money? Because they put close to around 20,000 crores in this asset to take it over. And then, in fact, they put in further capex, and they also said that from 4.5 million tons, this capacity goes to around 5 million tons. So all of that is on the drawing board. How do you reverse all of this, with regard to the cash flows that have come in there, the capex that have taken place as well? So it'll be interesting to see whether or not there's a way out of this for JSW Steel. But otherwise, it's a negative. 10% of EBITDA, around 12.5 to 13% of capacity. It's come out of nowhere.
Oh, indeed. We've got, let's ask some of these questions. We've got senior advocate at Supreme Court, H.P. Ranina, now joining in on the show. And Nigel, do stay on to, throw in some questions. So first question is, will JSW Steel challenge, review it? Is there hope of any sort of, some sort of reconciliation for JSW Steel? And two, what happens legally now? The sunk cost into the asset in Bhushan Power, JSW Steel has invested in it, increased the capacity. What happens to that?
Well, on your first question, the answer is very simple. You can go on a review petition only if there is a fundamentally wrong error of judgment made by the Supreme Court, which I don't think is so in this case, because this is on the question of fact. That you had said that you would only issue equity shares. You went in for convertible debentures as well. And this was in violation of the earlier order which was passed. So that is why the Supreme Court has held that this is illegal. Therefore, it cannot be reviewed. You cannot review something on factual errors where the factual error has been created. Therefore, I don't think a review petition will work. But the only thing that can work is that the JSW can go back to the Supreme Court and said, okay, we will only go by the equity route, which was earlier mentioned by us in our settlement scheme. And we will not issue the convertible debentures. And therefore, please review the order based on this new fact that year after we will only take the equity route to infuse funds into Bhushan Steel. So that's the only way to salvage the situation. I don't think any other way will work.
All right. So, Mr. Ranina, there is a hope still for JSW Steel to still retain this asset.
Yeah, they can. Because otherwise it would be a write-off. As you rightly said, they've sunk so much money into the company, it will be a complete write-off. And that will be a huge drain on the balance sheet of JSW.
Indeed, and the other problem is that it sets a very difficult outlook for the entire industry. For all these assets that get into trouble, and then you have some of these other companies that come in there. So it's not just for this asset; it will set a very negative sentiment for the entire industry. Just comment on that.
Yeah, I entirely agree with you. It will have a very, very dampening effect. And in fact, it will slow down industrial growth to some extent, especially for the steel industry. So the repercussions are substantial. And therefore, they can go back to the Supreme Court and said, look, these are going to be the repercussions. We have therefore decided to take the equity route alone. And therefore, please allow us to go ahead. That's the only way they can salvage the situation.
Right, Mr. Ranina, but I'm just surprised at the way, the amount of time this has taken place. Late in, I think, 2019 or thereabouts is when we started, hearing about the resolution of this case. JSW Group, I think they officially took it over in 2021. And at 2025, you're saying that something that was done earlier was amiss. Shouldn't this have been done earlier?
Yes, it should have been done earlier, but you can't help it. I mean, there may be so many other issues before the Supreme Court. Maybe there was a delay on the part of JSW itself. Their own lawyers may have delayed the matter. We don't know. But anyway, now nothing can be done. The judgment is final unless they come up with the original scheme of equity share issues.
So, Mr. Ranina, just to sum up, what you're saying is JSW Steel still has a chance. They can appeal against this and they can salvage the situation and probably go according to the Supreme Court's, verdict and retain this asset. And that would be good, not just for them, but for the entire system. Because otherwise, there is capex that's put in, there are cash flows that they have got back, and they have ramped up this asset from around 2.75 million tons towards 4.5 million tons. So it'll be a win-win-win for everyone. If in fact JSW appeals, then gets some kind of relief and goes according to what the High Court is saying. Is that correct?
That's correct. But it is not an appeal. It will be a review based on new facts. You can't appeal against the Supreme Court's own order. You can only ask them to review it. It will be a review based on the new facts which will be brought before the court.
And the new fact here, sir, will be that we will take over, we will complete the takeover only with equity and not a mix of equity and OCD. So they need to go back with that promise.
Absolutely.
Is there a possibility that the Supreme Court says no ways we want this to go into liquidation, or
No. I think if you point out all the repercussions of this order, the Supreme Court will, I'm sure, reconsider. They are not going to take a.
Got it.
Why did it take so long for, just once again, I know you spoke about it and we've been discussing it, but still, it's, the judgment could have come.
This is the unfortunate thing, our judicial system works very slowly, and this has always been a big problem. And we have always hoped that the Chief Justice will do something to expedite the system. But unfortunately, the whole system continues. So it's become so big, so fundamentally, entrenched. It's very difficult to change the system.
Okay. All right. Mr. Ranina, we appreciate you joining in. Thanks a lot for giving us your first take. Once we get further details, we request you to come back on the channel. So that's the word that's coming in from Mr. Ranina there. As of now, the Supreme Court has, their verdict goes against JSW Steel. But JSW Steel has an option to go ahead and request for them to review the, this particular petition. Because otherwise, it's going to be a mess for everyone, for the lenders.
Sure will, right?
I mean, that's what Mr. Ranina says, that they have a case out there to request for review and then go according to what the Supreme Court is saying. Otherwise, it'll be very difficult to account for all the investments that have gone in there, all the cash flows that have come off as well. And for JSW Steel, it now contributes 10 to around 12% of their total EBITDA as well as their capacity. So we'll have to wait by to see how this goes. For the time being, it's negative, but all is not lost. One would have hoped that this happened sooner rather than later, because imagine you acquire an asset few years ago, 4 years ago to be precise, and then you get, get smacked back in 2025 itself. So I'm trying to get in touch with the JSW management. Hopefully one of the spokespersons as well come on the channel and clarify their stand.
Indeed. Just to confirm, 10 to 12% of the EBITDA?
Yeah, EBITDA is around 10% as of now. In terms of capacity, 13%. Just to 12.5%, 12.6%, I think a rough calculation told me. And the capacity now is 4.5 million tons. That goes to around 5 million tons. At the time of acquiring this asset, it was 2.75 million tons. That went to around 3.5 million tons. Now it's at around 4.5 million tons, which is headed to 5 million tons.
It's interesting there.
And
So-
20,000 crores was the total money they put on the table.
Oh, 20,000 crores. That's a big number as well. That has been pumped in by JSW Steel and showing on the price as well, right? 6% lower now on the stock at the lowest point of the day at 971 is JSW Steel. Of course, the two criteria cited by the Supreme Court include that they used optionally convertible debentures and not just equity, and of course failing to complete it within the prescribed timeline. And as Mr. Ranina also said, that the only way this can be salvaged now is a review petition that can be filed in the Supreme Court, and JSW Steel goes in to highlight the repercussions of such a move. But the call time on this edition of Trading Hour from Rima, me and the team that put this show together. Thank you for watching. We leave you with the Nifty just around 20 points higher now with JSW Steel, the top loser at the lowest point of the day. Counting down to earnings, there are a lot of them slated to be reported in the second half of the day. Halftime report takes the action forward.